Hello friends, good morning to all of you. I hope all of you guys are doing well. So today we have a second session on the business combination. In the last class we have started with the business combination guys, Ind AS 103, right? So let's devote 5 minutes what we have discussed in the previous session on business combination. First of all, business combination is a very important topic, not only from exam perspective but also from the market perspective. When you guys become a chartered accountant and go in the market, right, you guys will see that lots of transaction is happening. What is transaction? Transaction between two companies in respect of acquisition, merger, demerger, amalgamation, all those stuff. In the last class we have said AS 14 we have read in the intermediate examination, right? But this is much more than the AS 14. The AS 14 only deals with the merger and amalgamation, but business combination deals with the acquisition of the business. Business can be a legal entity, business can be a one business out of the legal entity, right? It's a much wide as compared to Indian GAAP AS 14. Right. Then we have talked about in the previous session, we have talked about couple of areas, couple of definition, which is the base of the business combination. What we have said, business combination definition we have read in the previous class. That means merger of two or more of the business, acquisition of two or more of the business, transfer of subsidiary from one entity to another, transfer of subsidiaries between the fellow subsidiaries, transfer of a subsidiary from parent to subsidiary, transfer of business from parent to subsidiary, transfer of business from subsidiary to parent, right? Acquisition of a business from the different companies. It can be any type of combination, right? So the acquisition of one or more of the businesses is called business combination. Then we talked about business, right? Very important topic. We have talked about business. If the definition of the business will get satisfied, then we will fall under Ind AS 103. Otherwise, I am outside the scope of Ind AS 103. Right? Otherwise, I am outside the scope of Ind AS 103. Right? So what is business? What we have said that it is an integrated set of activities for providing goods and services, for earning income on investment, right? And to generate the output, right? To generate the profit in the ordinary course of business. That is what the business is. Then we have talked about elements of the business. Elements of the business: input, process, and output. Very important. Input, process, and output. Right? Input means, for example, non-current asset, plant, intangible asset, license, right? License, patent, copyright. So this is what the input is. Skilled workforce. Process, management process, operational process, resource management process, that is called process. And both these things needs to be there in order to generate the output. It may be possible that the output is generating on the acquisition date. It may be possible on the acquisition date output is not already generating. Company already has the input process, but they are capable to of generating the output. That is called business. It is not always possible all the output is generating on the date of acquisition. Correct? So input must be there, process must be there, and then we will get output. They should have the capability of generating the output. It may also possible, guys, that I am already having a skilled workforce. I am already having a plant, but I have acquired a business without that plant. I have acquired a business without the management process, right? By using my own process, by using my own input, I will be able to generate the output. That is also considered to be a business. Right? Let's say A Limited has acquired a company, and in that company there is no process. There is only land which is sitting idle. So whether I have made an investment in a company or whether I have made an investment in land only, it is actually a land which I have acquired. Right? So in that case, it is outside the purview of the business combination. We will do the accounting of asset acquisition. That means what is business? When we talk about business combination, something comes to our mind that is called goodwill. Right? So in case of asset acquisition, no goodwill needs to be recognized. Correct? Then we talked about the substantive process. The process needs to be substantive. The process needs to be substantive. Correct? That means in reality, there should be a process should exist. Right? There should be a skilled workforce. Right? The output can be generating at the date of acquisition. Output may not be generating at the date of acquisition. right? If the output is generating, that means input and the process should continue to produce or capable of generating the output. If the output is not generating at the rate of acquisition, then the input and process shall be capable of generating the output. Skilled workforce who has the necessary skill, who has the necessary knowledge in order to generate the output. So that is what the substantive process is. Then we have talked about concentration test. What is concentration test? If I have acquired an assets or a business, right, and the purchase consideration is largely aligned, largely concentrated to the group of asset or a particular asset, then we will say it is not a business combination, it is an asset acquisition, right? If concentration gets satisfied, if concentration test gets satisfied, then we say it is asset acquisition. Correct? If concentration gets failed, then it is a case of business combination. Correct, guys? Then after that, we have talked about asset acquisition. What is asset acquisition? Asset acquisition is acquisition of an asset or a group of assets. Acquisition is not a business combination. Asset acquisition is not a business combination. Correct? How to account for? Account for as per Ind AS 16. Right? Then we have talked about what is the difference between asset acquisition versus business combination. Right? There are multiple parameters which we have talked about. For example, goodwill. In case of business combination, we recognize goodwill. In case of asset acquisition, we don't recognize goodwill. Transaction cost, we capitalize in case of asset acquisition, but in case of business combination, we don't. Right? Contingent liability, we recognize. In case of asset acquisition, no contingent. Business combination, all assets and liabilities need to be recognized at fair value. But in case of asset acquisition, we recognize on the basis of allocated cost, which is computed based on fair value. Initial recognition, asset acquisition cost, business combination, fair value, guys. This is what we have discussed in the last class, which we have recapped in last 7 to 8 minutes, guys. Let me know if there is any doubt of previous class. Okay, let's move on, guys. Let's understand today what we are going to understand. Today we are going to understand the methods of acquisition, how this needs to be accounted for. Right? How this needs to be accounted for, how the business combination needs to be accounted for. So first of all, methods of business combination. Methods of business combination. Right? How many methods, guys, of business combination? There are 2 methods of business combination. First is acquisition method. Acquisition method. Or it is also called purchase method. Second one is common control transaction. Right? Acquisition method. What is this? When the business or entity is acquired from a third party. From a third party. That means transaction is outside the group. Transaction is outside the group, right? This is called, this accounting needs to be done at fair value. Accounting needs to be done at fair value. Correct? Fair value. So what is common control transaction? Common control transaction means the transaction acquisition of business or entity is within the group. Within the group, right? This transaction needs to be recorded. Accounting needs to be done at book value. Accounting needs to be done at book value. Correct, guys? I think couple of questions have been raised by the people. Let me answer those questions. Let me complete this thing, then I will answer those questions. What are the methods of the business combination? Right? So there are two methods. One is the acquisition method. Second one is the common control transaction. When the business, what is the acquisition method? Acquisition method is example could be A Limited, B Limited, right? Unrelated parties. Unrelated parties. B Limited has three business. Business 1, business 2, business 3, right? And A Limited is acquiring business 1 only. A Limited is acquiring business 1. This is a case of acquisition accounting, right? What could be the example of common control transaction? Let's say this is the holding company. This is the subsidiary company, subsidiary 1, subsidiary 2. Let's say this is subsidiary 3, right? It is also having, let's say D Limited as a subsidiary 100%, E Limited 100% subsidiary, right? All these are 100% subsidiary. Now let's say in this case, S Limited is acquiring D Limited from S2. S1 is acquiring D Limited from S2, right? That means transaction is within the group, right? This is called, guys, this is called the different methods of the computation of the business combination. Okay, Sairam is saying, sir, what about merger? Merger is not covered in the business combination. Merger is covered. Who said no cover? Merger is covered. Any type of acquisition, merger, demerger, right? Business combination. Let me write here. Business combination includes merger, amalgamation, acquisition of a legal entity or acquisition of a business. Right? Or transfer of business or entity within group. Within the group. Right? It includes merger, it includes amalgamation, acquisition of a legal entity, acquisition of the business, transfer of business or entity within the group. I hope this is clear, Sairam. Okay, China has raised one point. Sir, what is the logic behind the acquisition of the NCI, which is 30% in fair value of the gross assets, as we have acquired and paid only for the 70%? Okay. So let me provide you some sort of understanding of the business combination accounting, right? Accounting of computation of goodwill. Right? Remember, guys, Sheena, I'm answering your question. Remembering, guys, I'm providing one concept basis which your doubt will get clarified. Right? So what we are saying, either it is a merger, demerger, amalgamation, acquisition. That means we are talking about a subsidiary. We are talking about a subsidiary. Accounting of subsidiary is how to do the accounting of subsidiary. Subsidiary accounting is line by line addition. Right? That means 100% consolidation. What does it mean? Let's say A Limited or H Limited is holding 80%, right? And the minority shareholders, let's say A Limited, is holding 20%. Correct? 1 lakh shares of rupees 10, 20,000 shares, or I can say 80,000 shares of rupees 10 and 20,000 shares of rupees 10. Right? S Limited balance sheet. Fixed assets 1 lakh rupees. Current assets 1 lakh rupees. Share capital and reserve and surplus, both is, let's say, 50,000 rupees. And liability, current liability is 1,50,000 rupees. Right? Now, guys, can you tell me when H Limited will do the consolidation? When H Limited will do the consolidation, whether H Limited should take entire fixed assets or 80% of the fixed assets? Whether H Limited should take entire 1 lakh rupees in the books of consolidation or only 1 lakh rupees? Whether H will take entire 1,50,000 rupees or 80% of 1,50,000 rupees? How should H Limited account for in its books of accounts? Guys, my question to you, how the H Limited will account for in its books of accounts? 80% or the entire 100% amount? Let me draw the balance sheet of H Limited as well. Let's say H Limited is having a fixed asset of rupees 5 lakh. Investment in S Limited 8 lakhs and current assets 2 lakhs. What is the total? 15 lakhs. Share capital and reserve and surplus, let's say 5 lakhs. And liability is around 10 lakh. Now guys, just tell me, if H Limited has to prepare the consolidated financial statement, whether H Limited will consider 80% of this financial statement or whether H Limited will consider 100% of S Limited. Okay. Jay Srivastav is saying full. Sheena is saying he will take the whole amount in the preparation of the CFS. Tanushri is saying 80% in the books and remaining 20% separately. What is separately? Are we preparing something different from the books? Tanushri, are we preparing something apart from the books? No, everything is in the books. Right? There is no other accounting apart from the books. If you're doing any accounting apart from the books, it's an illegal accounting, right? Which is not there. Okay, Tanushri is saying under the head minority interest. Sairam is saying 80% accounting is to be done, right? So those people who are saying 80% accounting is done, very good, but the answer is incorrect. What is subsidiary accounting? What is subsidiary accounting? Line by line addition and 100% consolidation. What does it mean? When H Limited will prepare its balance sheet, which is consolidated, right? So what he will do, fixed assets, holding के fixed assets कितने हैं? 5 lakh rupees. So he should add 5 lakh rupees plus subsidiary के fixed assets 1 lakh rupees. 1 lakh. So this will be 6 lakhs. Correct? Investment in S Limited. Investment in S Limited of rupees 80,000. Correct? 8 lakh rupees. 8 lakh rupees. And then current assets 2 lakh. Current assets 2 lakh. Plus subsidiary current assets, which is 1 lakh rupees. This reaches to 3 lakhs. Correct? Now share capital plus reserve and surplus. Holding के कितने हैं? 5 lakh rupees. And subsidiary के कितने हैं? 50,000 rupees. Or make it like 1 lakh. This will be 2 lakh and this will be 1 lakh, right? Subsidiary is at 1 lakh. Correct? Then liability. Liability is 10 lakh rupees. Right? Liability is 10 lakh rupees. Plus subsidiary 1 lakh. So this will be 11 lakh rupees. This investment is 8 lakh rupees, or what we have taken investment is 8 lakh rupees. So we need to update the number so that it will be netted off, guys. Here we have taken 1 lakh, or what should we do? Let's say this is, so we are saying this is 8 lakhs. Okay. This we are saying 1 lakh, 1 lakh. Make it 10 lakh rupees. Right? Make it, this is 2 lakh rupees. The entire total is coming like 12 lakhs. And make it 10 lakh. Right? The objective is it should be adjusted. So 10 lakh, 5 lakh and 10 lakh is 15 lakh. Correct? So we have considered this number, we have considered that number. Current asset is 2 lakh rupees. This will be 4 lakh. Investment is this. Share capital is 5 lakh. and here the share capital is 10 lakh. So this will be 15 lakh. This 10 lakh is correct, and this is 2 lakh rupees. Right? Right. So currently it is coming like 27 lakhs, and this is also coming like 27 lakh rupees. Correct? 27 lakh rupees. What I have done, I have just added the line by line addition of the financial statement. That means fixed assets of the holding company, fixed assets of the subsidiary company, current assets of the holding company, current assets of the subsidiary company, right? Liability of the holding, liability of the subsidiary, right? Share capital reserve and surplus of the holding company, share capital reserve and surplus of the subsidiary company, right? So this is how the consolidated balance sheet needs to be prepared. That means what I have done, I should have taken 80% of the entire numbers. But since I'm controlling, I have taken 100% of the entire numbers. Right? 100% of the entire numbers. Correct? Now in this case, what needs to be done? Couple of things needs to be done. First is I need to make an adjustment. I need to make an adjustment. What all adjustment? First is intercompany elimination. Intercompany elimination. I need to eliminate intercompany. What is the transaction between holding and subsidiary? I need to eliminate. For example, holding company has sold the goods to subsidiary. Sold goods to subsidiary, right, at 10% profit. Correct? And let's say 60% of goods lying in inventory of S Limited, right? So holding the subsidiary को goods बेचे at 10% margin, but out of those entire goods, 60% has not been sold outside the group. So that means that 60%, that 10% profit on the 60% of inventory is sitting in the books of accounts. So I need to make an adjustment. What can be the other adjustment? Investment versus share capital, right? Now this is a combined balance sheet. This is a consolidated balance sheet. Now I am saying my investment is 8 lakh rupees, and where the share capital is sitting, share capital is sitting in 10 lakh rupees. So what I am supposed to do, I need to eliminate this intercompany transaction. I need to eliminate this intercompany transaction. 8 lakh rupees minus 8 lakh rupees, right, which is 0 in this case. And similarly, I need to minus 8 lakh rupees as an intercompany transaction from here as well. Correct? If you see 10 lakh rupees, who are the shareholder of this 10 lakh rupees? The shareholder of this 10 lakh rupees are though holding company is having 8 lakh rupees, and the other shareholder, which is minority shareholder in this case, A Limited, is holding 2 lakh rupees. Right? So what I need to do, I have eliminated my part, and I need to recognize NCI as well. I need to recognize NCI non-controlling interest of rupees 2 lakh. Right? And I've eliminated my share of investment versus share capital. Now this will reach to only 5 lakh rupees. Right? So what is my revised number? 12 plus 7, 19 lakhs. What is my revised number here? 19 lakhs. Right? Why I have told you guys, I just want to tell you, in case of subsidiary accounting, we will do line by line addition of the another company, and we recognize 20%. We recognize 20% as a non-controlling interest NCI. Correct? This is called subsidiary accounting. So if I will provide you the overview of the consolidation accounting, there are only three type of relationship in the consolidation. Three type of relationship. Consolidation accounting. Right? There are only three types of relationship. One is subsidiary accounting. Right? What is the accounting? Accounting will be very clear. 100% addition, line by line. Line by line. Recognize NCI. Correct? Second one is associate accounting. That means this is generally more than 50%. What is associate? 20% or more, but up to 50%. Right? In this case, we only take equity pickup. Equity pickup. What is equity pickup? I will add into the investment and I will add profit or loss. Right? ये कितना आएगा? This is only a percentage of share. Associate profit or loss multiplied by the share of holding company in associates. Right? Third one is joint venture. Same, we need to apply equity accounting. This you will learn in Ind AS 110 and Ind AS 111. Fourth is joint operation. Joint operation. In joint operation, what accounting will do? We do proportionate accounting. Right? Of respective shares. Right? So I just want to tell you guys, these are the four relationship exist under accounting, which you will learn. Subsidiary is driven by Ind AS 110. Associate is driven by Ind AS 28. Right? Joint venture is governed by Ind AS 28 and 111. And joint venture is governed by Ind AS 111. Right? So these standards will provide the guidance how to account for. Now we were discussing subsidiary accounting, right? 1%, I think Sheena has raised a question, sir, why we are adding NCI? Now just think about it. Let's compute goodwill. Purchase consideration is 100 crores. Correct? And I have acquired net assets. I have acquired net asset at 60 crores. My goodwill is 40 crores. Right? And what is the stake? Let's say A Limited, B Limited, and this is AB Limited. A Limited has acquired 60% stake. Right? 40% is retained by B Limited. So this is the method one of computation of goodwill. Of goodwill computation. Right? What is the another method? Method 2 of goodwill computation. Right? What is that? Purchase consideration. I will take 100 crores. Right? Net asset. This is, let's say, 60% only. Right? Net asset, which is, this is 60%. Net asset, I will take 100%. Right? Net asset, I will take 100%, which is 80 crores rupees. Right? What I will add? I will say I will add NCI as well, which is let's say 40% in this case, and its value which is coming out to be 20 crores. I will reach back to my goodwill with the same number. I will reach back to the same number. That means goodwill computation, that means who has acquired a control? A Limited has acquired a control on AB Limited. That means AB Limited will become a subsidiary of A Limited. Then what is the accounting? Line by line addition. So by doing this accounting, I will take 100% of net assets. I will recognize NCI. I will recognize goodwill. So what is my entry? Entry will be assets debit, right? In this case, we are saying 80 crore rupees. 2, goodwill debit 40 crore rupees. 2, purchase consideration 100 crore rupees, and 2 NCI 20 crore rupees. This will be the accounting of business combination, which will flow to console as a part of subsidiary. This is only a method of computation, guys. Just see, this is the one method of doing the accounting, and this is the another method of doing the accounting. Both are same. The only point is, in this we are not recognizing 100% of assets. We are recognizing only 60% of the assets and liabilities. Here we are recognizing 100% of the assets and liabilities, plus we are also recognizing NCI. So if you look at what we have done, this is nothing but a 60%. Right? This is nothing but a 60%, and purchase consideration is also for the 60%. Now Sheena is saying, sir, but net asset is 60 crore rupees. Net asset of the company is 60 crore rupees only for 60%. Only for 60%. Right? Let's say the net asset of this company is 80 crore rupees, the fair valuation. Right? What I'm just trying to tell you guys, this we have considered only 60%. This we have considered 100% needs to be considered here. 100% needs to be considered here. So in a consolidation accounting, we do line by line addition, guys. We need to be very clear. You guys need to be very clear. What is the meaning of 100% addition of line by line item in the consolidation? Right? Subsidiary means where I have a control. Control may be more than 100%, control may be more than 50% stake, and maybe more than through board of directors. Right? We are going to discuss today. We are going to discuss today in the acquisition accounting. When we go through the acquisition accounting, we will understand that what is the power, how the control needs to be evaluated. Right? But we need to agree, guys, you need to understand this concept. In case of consolidation, we do line by line addition, and that's why while doing the goodwill accounting, we take the net asset on 100% basis. Ideally, we are not acquiring 100%, we are acquiring 80%. But to do the consolidation, we have to account for like this only, so that we can compute the goodwill, so that I can record the net asset at 100% line by line addition, and I will also record the non-controlling interest as well. This is what the subsidiary accounting. Kumar Mangalam has raised multiple questions, but all the questions are same. H Limited should take 80% of net assets, or if H Limited has taken 100% of net assets and can give 20% to A Limited, both are same. If H Limited has acquired, so what he has said, let's say H Limited has acquired 100% in A Limited, right, as on 1st January 2022, right? 31st March 2022, H Limited has sold to A Limited, not to A Limited, to B Limited 20% interest, right? So revised structure will be 80% and revised structure will be like 20%. Even this A Limited will be a subsidiary. even in this case, A Limited will remain a subsidiary. Right? What is the accounting in the books of consol? 100% line by line addition. Line addition. Right? In this case, there is no NCI. But in this case, 100% line by line addition. Right? Plus recognize NCI. Are we clear, guys? Okay. Sairam is saying, sir, what about the profit share? Sairam, this is the accounting which we have done on the date of acquisition. Right? This is the accounting on acquisition date. Going forward, when you will prepare the accounting for the subsequent period, you will keep on adding NCI profit here. Right? Let me also show you how the profit needs to be computed. Let's say this is the profit. Let's say this is the profit of subsidiary S Limited, right? And holding is having 80% on subsidiary. Let's say this is revenue, 5 lakh rupees. This is expenses, 3 lakh rupees, right? And this is a, let's say, net profit, 2 lakh rupees, right? This net profit needs to be bifurcated into the parent and NCI. How it is to be computed? 2 lakh rupees multiply by 80% and multiply by the period. It may possible that I have acquired 80% during the year. So I will do the period proportionately, right? In this case, the period is entire year. So 1. So this will be 1,60,000. How to compute NCI profit? 2 lakh rupees multiply by 20% multiply by the period. In this case, period is 1 year, 40,000 rupees. This will go added in NCI and this will go reserve and surplus of holding company. Are we clear, guys? Very simple sense में what we are doing, 80% interest है, but I have acquired 100% of assets, 100% of liability, 100% of current assets, 100% of share capital, right? 100% of revenue, 100% of expenses. That means ideally I should have taken 80% of all these items, but I have taken 100%. But for 20%, what I'm doing, recognize non-controlling interest. My balance sheet will be matched. I will, from the reader perspective, it will be very clear that company has a non-controlling stake and the total amount is payable, which is this much. And going forward basis, I will keep on adding the profit. I will keep on bifurcating the profit in the NCI and in the parent based on their proportionate shareholding, based on the period as well. Right? This will keep on increasing. If there is a loss, this will keep on decreasing. Right? So first of all, guys, are we clear on the accounting aspect in subsidiary line by line addition 100%? In the associate, मैं सिर्फ अपना 20% पिकअप ही लूंगा. Right? यहाँ पे सिर्फ 20% ले लें. Because I am holding only 20%, I am not controlling the company. Here I am controlling the company. Since I am controlling the company, standard says take the full company as it is for the consolidation, recognize NCI. Correct? In joint venture, equity accounting, in the joint operation, it is not a legal entity. In the joint operation क्या होता है? A Limited, this is B Limited, no entity set up. They are merging their operations. Merging operations. Merging their operations, right? So A Limited, so now it depends upon what is written in the contract. If A Limited is saying, I will take 60% of the revenue, then take it. A Limited is saying that I will take 50% of the assets, take 50%. A Limited is saying that I will take 80% of liability, take 80%. Right? It depends upon the joint agreement entered between A Limited, B Limited. Right? So very simple. In a nutshell, let me conclude. Subsidiary accounting 100% plus recognize INSEAD if any. Associate accounting equity. That means I will recognize only to the extent of my share. Joint venture accounting, equity accounting similar to associate. Joint operation accounting proportionate as agreed in the contract. Right? And why we are adding NCI? I hope you have got the perspective why we are adding NCI. Where I have written? Right. Are we clear, guys? Why we are adding NCI? Because we need to do subsidiary accounting. It's only a method of presentation. The results is same. The result of the profit is same. If you do the equity pickup, if you do the subsidiary accounting, reserve will remain the same to the extent of my share. Yes or no, guys? Are we clear? Are we clear or not clear? Are we clear or not clear? This is the right time, guys. If anyone has any doubt on this particular aspect, please discuss. Otherwise, you will face a challenge in the entire business combination and in the consolidation. Right? I will also tell you again, in the entire business combination, everything is revolving around goodwill. Right? Goodwill. How the goodwill needs to be computed? Purchase consideration minus net assets 100% acquired at fair value plus NCI. Right? If exist, and then I will add goodwill. I will get goodwill or bargain purchase gain. This will be the whole accounting, guys. Entire standard will be revolving around this only. Right? And we will keep on extending this formula. We will keep on extending this formula. Correct. Sheena is saying, yes, sir, we are clear. Sairam is saying, we are clear. Sheena is again saying, yes, understood. Right? So remember, guys, this is the formula of computation of goodwill or bargain purchase gain. Right? Okay. Now, Sairam is saying, sir, can you repeat the adjustment steps? Adjustment steps in the console, ideally you should get to know in the console session, but for your understanding, let me explain again. Adjustments in console, not only adjustment console, how to prepare consolidation, consolidated balance sheet, right? I am only going to talk about subsidiary accounting. Right? First, merge holding and subsidiary balance sheet line by line. Correct? Eliminate investment versus share capital of subsidiary. I hope this small step must be clear. जब मैंने दोनों की बुक्स कंबाइन कर दी, नाउ वी आर सेइंग इन्वेस्टमेंट क्यों है सब्सिडरी में, अपनी बुक्स में, और अपने आप को ही शेयर कैपिटल इश्यू करी है. इज इट पॉसिबल? कैन आई से दैट आई हैव मेड एन इन्वेस्टमेंट इन माय कंपनी? Right? Now we are preparing the console balance sheet. Can I say I have made an investment in my console books? No. One side I have an investment, second side I have a share capital. I need to eliminate this. Third, eliminate intercompany elimination, intercompany transactions. Right? Fourth, apply business combination accounting. Combination accounting on acquisition date. ठीक है? That means recognize goodwill. Recognize goodwill. Assets acquired and liability assumed. Right? Recognize NCI. Right? These are the broad heads which I have captured here, guys, for your understanding. But definitely, when you deep dive, there are multiple things which you need to understand in Ind AS 110. Where it is written, it is a guidance which is governed by Ind AS 110 consolidation. Are we clear, guys? Quickly, are we clear? Yes or no? Sheena, Sairam, Jay Srivastav, Kumar Mangalam, are we clear, guys? I'm waiting for your response. Okay, let's come back to business combination again, guys. We were discussing what we were discussing, acquisition accounting, right? We were discussing acquisition accounting or the purchase method accounting. Then we need to discuss common control transaction. And while we were discussing the acquisition accounting, we need to discuss lots of concepts here. I hope, guys, you guys will be clear in respect of this concept. Nobody said yes. Especially Sairam has raised this point, sir. Can you repeat the adjustment steps? Waiting for your reference. Okay, acquisition accounting. Right? What is acquisition accounting? Steps in acquisition accounting. Remember, guys, when we are doing the subsidiary accounting, we need to take 100%, right? Irrespective of the fact that I am owning 60%, 70%, 80%, 90%. Recognize NCI. Correct? Okay. Steps in acquisition accounting. Step number 1, identify acquirer. Right? Identify acquirer. Second is determine acquisition date. Right? Third is determine. Okay, Sheena said, yes, sir, understood. Even this will be further covered in the CFS chapter. Absolutely, this will be covered in CFS chapter. Determine purchase consideration. Right? Determine or recognize all assets acquired and liabilities assumed, right? Recognize hidden intangibles. If you see, guys, I am talking about the same formula which I mentioned here, right? Purchase consideration, net assets, NCI. If you look, I am going to write the same thing: purchase consideration, net assets acquired, right? 6 point is recognize non-controlling interest, right? Recognize non-controlling interest. 7th is recognize goodwill or bargain purchase gain. And 8th point is recognize deferred asset, deferred tax, right? If you look at, guys, this is the formula which we are deriving, which we have talked about here. Purchase consideration minus net asset plus NCI is equal to goodwill. We are going to discuss each and every item in this. Correct? Okay, let's go step by step, right? First point is identify the acquirer. Now we need to deep dive and understand. First is identify the acquirer. Can you tell me what is your understanding of the acquirer? What is your understanding of the acquirer, guys? First point, who is the acquirer? Who is the acquirer? Acquirer is the enterprise. Enterprise who has acquired control on other business or entity. Correct? Who has acquired control? Correct? What is control? Control needs to be determined as per Ind AS 110, right? C point, business combination accounting. Business combination accounting needs to be done in the books of acquirer. In the books of acquirer, right? Acquirer 1%, Jay Srivastav saying purchaser. Absolutely. Who is acquirer? Purchaser. Buyer. Correct. Now, guys, tell me business combination accounting. So we are saying that the business combination accounting needs to be done in the books of acquirer. Correct. So now tell me whether this accounting needs to be done in the standalone books of the acquirer or this accounting needs to be done in the console books of acquirer. Last time in the last session, we have talked about this aspect, whether the accounting needs to be done in the standalone books or it needs to be done in the console books. Yes or no, guys? Quickly. Quickly, guys, in the standalone books में accounting करनी है or do we need to do the accounting in the console books? business combination accounting needs to be done only in the consolidated financial statement. But in case of merger, amalgamation, acquisition of business, business combination accounting needs to be done in standalone financial statement. Are we clear, guys? बिजनेस कॉम्बिनेशन अकाउंटिंग हमेशा कंसोल में करते हैं, हमेशा इन द कंसोल फाइनेंशियल स्टेटमेंट. बट इन केस ऑफ मर्जर, amalgamation, acquisition of business, business combination accounting needs to be done in the standalone books, right? How it is to be determined? Simple logic, very simple. A Limited is acquiring B Limited's business, right? This is business 1, business 2, business 3. A Limited has acquired business 1. Acquired business 1. Business 1, it's not a separate legal entity. Not a separate legal entity, right? What is one business 1? Let's say business B1 is a real estate business. Right? So A ने क्या किया? A has taken this business. A has taken this business and he has merged into its standalone entity. Right? So now when A Limited will prepare its financial statement, it includes A Limited SFS plus B1 SFS. This will be A Limited standalone FSA, standalone financial statements, right? So in this case, accounting is done in the standalone books. A is not creating B1 as a separate legal entity, right? Let's say this is scenario 1. Scenario 2, right? What A Limited has done in this case, this is B. B is having multiple business 1, B2 and B3, right? Now A has purchased this business in this scenario. Purchased B1. Now what is the revised structure? Revised structure is A Limited, right? And A Limited has set up B1 Limited as a new entity, new legal entity, right? In this case, business combination accounting needs to be done in console books. In CFS of A Limited. Are we clear, guys? When the standalone books accounting needs to be done and when the console accounting needs to be done for business combination. Are we clear, guys? Just look at these two examples. In this case, no new legal entity is set up by A. No new legal entity set up by A Limited. Are we clear, guys? In this case, accounting in the books of standalone of A Limited needs to be done. Business combination accounting, in this case, console books of accounting needs to be impacted of business combination accounting. Quickly, guys, yes or no? Are we clear? Waiting for your response. Are we clear, guys? Yes or no? People are not saying yes or no. I'm not sure whether we are clear on the standalone books of accounting impact or the consol books of accounting impact. Guys, at least say yes or no so that I can know whether I need to move forward or explain these concepts again. Sarah is saying if the company acquired a separate legal entity, the company needs to done the accounting in the consol books. Yes. The only point is if I am acquiring this business and I'm setting up this as a separate legal entity, right? Then the business combination accounting needs to be done in the consol books. We will pass separate accounting, separate adjustments, guys, in the standalone and in the consol, right? But what we need to understand, or what we need to identify here is who is the acquirer. Acquirer is the company, acquirer is the person, acquirer is the enterprise who has acquired control. How the control needs to be determined as per Ind AS 110, right? Which we need to understand. Correct? Okay. Now let's understand what is control. Understand what is control under Ind AS 110, right? So this word control is governed by three factors. One is power. Second is exposure of variable return, right? And the ability to use power to affect return. So there are three components: power, exposure to variable return, and ability of power to affect the variable return. What is power? The only point is how do we get the power? How the entity or enterprise will get the power, right? So there are multiple rights. Power is nothing but a rights. Rights, what are those rights? Voting rights. Second is potential voting rights. Right? Rights related to the appointment of KMP of the company. For example, who is the KMP? Can anyone tell me who is the KMP? KMP is nothing but a key managerial person. Key managerial person. Right? Example, CEO, CFO, CTO, for example, Chief Technical Officer. Right? CSO, Chief Strategy Officer. COO, Chief Operating Officer. Right? So if one party has a right, one party has a voting right, maybe 55%, 60%, then that factor needs to be considered that will provide a power. If one company has a potential voting rights, we will discuss what is potential voting rights. For example, convertible debenture. Convertible debenture, appointment of the KMP. Fourth, rights related to deciding managerial remuneration. Managerial remuneration of KMP. Fifth, related to or I would say kick-off rights. Kick-off rights of KMP. Kick-off rights of KMP. Rights related to selling and purchasing of product. Right? Research and development activities rights. Rights related to relevant activities. So these are some of the illustrative rights, guys. These rights are illustrative. Right? So we are saying that one entity, if the one entity has a voting rights, it will give the power. If one entity has a convertible debenture into equity in future, convertible bond, convertible preference share, which will get converted into the equity shares of the company. So they will get voting rights in the future. Potential means future. Right? Future. We generally say na potential employee. That means this is the person who I'm going to hire. Potential employer. I'm going to be, let's say Google is going to be a potential employer for me. Right? Similarly, potential voting rights. Future में ये मेरे voting rights होने वाले हैं. Appointment of the KMP. This is the small list of the KMP. It can be more. Rights related to the decision of the managerial remuneration. तो उनकी managerial remuneration का rights किसके पास है? Right? Kick-off rights of the KMP. Rights related to the selling and purchasing of the power. Research and development activities. Rights related to the relevant activities. If the combination of these factors provides the power, combination of these factors provides the power to one enterprise over another. So if you look at the shareholder agreement, if one party has these rights available to him, available to that company, then it provides a power to control the another company. Jay Srivastav saying, what is the kick-off rights? Removal rights. Removal rights, that we can remove the KMP from the company. What is kick-off rights? Removal rights. That we can remove the KMP from the company. Right? So these are the different rights which if available, and this needs to be evaluated in combination. It is not the case, एक right हो गया, so I have the power. No, it needs to be evaluated in combination. That means there is a subjectivity involved when we are evaluating all these parameters. I hope power must be clear to you guys. Quickly say yes or no. Then we will move to return. Then we will move to return. Yes or no, guys? Jay Srivastav is saying yes sir, clear. Okay, now the exposure to the variable return. What is return? Return is remuneration. Return is basically remuneration. Return is basically profits. Return is basically dividend. Return is basically interest income. Right? Interest income. So we are saying control over investee. Control over investee. So one is we are saying power. We are saying power. I'm talking about a structure. Let's say H Limited. This is A Limited, and this is, let's say, NCI. Right? 80%, 20%. Right? If H Limited has the voting rights 80%, it is an indication, it is an indicator H has a power. If H Limited has a right of the potential voting, it is an indicator that H is controlling the company. Right? Or H Limited has the power. If H Limited has the appointment rights of the KMP, it is an indicator that H has a power over the company. If H has a right to take the decisions, material decisions, relevant decisions of the company, it is an indicator H has the power in the company. Right? Who is the investor? H is the investor. NCI is the investor. Right? Who is the investee? Who is the investee? A Limited is investee. So what we are evaluating? We are evaluating control over investee. Control over S Limited in this case. Right? So power should be clear. Now exposure to the variable return. What is variable return? A variable return is A Limited's profit, A Limited's interest income, remuneration, right? Remuneration. What else? Interest, profit, dividend. Remuneration payable, dividend payable. Right? 1, 2, 3, and 4. Right? So we are saying A Limited investee के पास इतने सारी income है, ये payable है, ये dividend है. So exposure to the variable return from the perspective of the investor, what is the variable return? Remuneration payable by the investee, profits to be distributed by the investee, dividend to be distributed by the investee, and interest income to be distributed by the investee. So पहले power होनी चाहिए, फिर ये profits होने चाहिए, and third point is ability to use the power to affect the return. Right? So what we are saying, investor has power. Right? Investor has the power to affect the variability of return. Right? हम क्या बोल रहे हैं? पहले power होनी चाहिए, फिर variable return होनी चाहिए, right? And then we are saying investor के पास power होनी चाहिए that he can change this return or amount which is to be distributed by the investee to the holder. Right? He has the power to change, to take the decision to significantly change these returns from the investee to the holder. Right? If all these conditions exist, then we will say H Limited is controlling A Limited. If H Limited is controlling, H Limited is the acquirer. Are we clear, guys? What all factors needs to be evaluated for evaluating a control? Right? The definition of the control has not been defined under 11103. It is defined under Ind AS 110. Right? Let me take an example, guys. Now let's say A Limited and B Limited. They have set up a new company, AB Limited. AB Limited issues 1 lakh shares at the rate of 10, right? 40,000 shares at the rate of 10. This is 4 lakhs. And this is 10 lakh, right? So A is holding share capital. A is holding 10 lakhs. B is holding 4 lakh. Total share capital is 14 lakh. What is the percentage? 10 lakh divided by 14 lakh multiply by the 100. What is the amount which I will get, guys? 4 lakh divided by 14 lakh multiply by the 100. What is the amount? 10 lakh divided by 14 lakh. 71% 42. 71.42% minus 100 is equal to 28.57% or 58%. Right? Now, guys, just think about it. Who is the acquirer in this stake, in this company? Who is the acquirer in this company? Whether A Limited is the acquirer or whether B Limited is the acquirer in this company. Evaluate voting rights. Evaluate voting rights. In this case, we have only talked about the voting rights. So what we will say, A Limited is the acquirer based on the facts available. It may possible that other facts needs to be evaluated. Based on facts available, A Limited is the acquirer. Are we guys clear? Are we guys clear? Yes or no? Waiting for your response, guys. I'm not sure people are gaining understanding on the business combination concepts or not. Should we move on or should we not move on? Waiting for your response, guys. Let me take a pause and understand. Are we clear? Very shortly, we will going to take up a couple of questions as well. Other factors or rights as mentioned in Ind AS 110 to be evaluated. Be evaluated. Yes, people are saying yes. So in this case, B is the NCI. That is correct. And A is the acquirer. Right? Now, in this particular case, we have talked about the voting rights, right? Potential voting rights. Now, let's understand potential voting rights. After this, we will do one question on this. Potential voting rights. Voting rights are available to the equity shareholders, right? So that means voting rights are available to equity shareholders. Right? What is the meaning of word potential? Future. In future. So that means voting rights are available to the shareholders in future. Example. First of all, what is the meaning of this? Potential voting rights means the rights, the voting rights are available in future. B, what can be the example? Convertible debentures, convertible bonds, convertible preference shares. C point is potential voting rights needs to be considered for evaluation of control. Correct? This is what the potential voting rights. Now let's open our study module and let's do one question on this particular aspect. Question number 4. Illustration 4 on page 13.19. Question number 4, page 13.19. It's on potential voting rights. P Limited, a manufacturer of the textile, acquires 40,000 equity shares of company X. So P Limited is there, right? P Limited has acquired 40,000 equity shares. Acquire 40,000 equity shares of X out of 1,000 shares in issue. So out of 1,000, he has acquired 240,000. As part of the same agreement, the P Limited purchased an option to acquire 25,000 shares. Plus, he has got options to acquire additional stake, right, of 25,000 shares. Correct? The option is exercisable for next 12 months. It's valid for next 12 months. Valid for next 12 months. The exercise price includes a small premium to the market price. Okay. After the above transaction, the shareholder of X to other original shareholder are 35,000 and 25,000. So there are other shareholders as well, right? X has other shareholders as well who are holding, let's say, shareholder 1, shareholder 2, right? They are holding 35,000 shares and this is holding 25,000 shares. Each of these shareholders also has currently exercisable options to acquire additional 2,000 shares, right? So what is actually the structure is, this is X Limited, right? X Limited has 3 shareholders after this acquisition. One is P, second one is SH1, and third one is SH2. P has acquired 40,000 shares. Correct? Shareholder 1 is having 35,000 shares and SH2 is having 25,000 shares, and this will be equal to 1 lakh shares. Now 40,000 shares held by P. He is also getting an option to acquire 25,000 shares options. This is option, right? Plus 2,000 shares option, right? Plus 2,000 shares option. Correct. Now assess whether control is acquired by P or not. So what we need to do, first of all, this option is a option to acquire shares in the future, is a potential voting rights. It's a potential voting rights, and this needs to be evaluated for the purpose of control, right? So how do we evaluate? Let's talk about first share capital. P, shareholder 1, shareholder 2. P is holding 40,000. Shareholder 1 is holding 35,000 and 25,000. This will be 1 lakh rupee, 1 lakh shares. Correct. Now potential voting rights plus 25,000 shares plus 2,000 shares plus 2,000 shares. This will reach to 65. This will reach to 37. And this will reach to 27,000. Its total is 29,000. The total reaches to 1,29,000 shares. If I need to compute the percentage, what is the percentage? 65,000 divided by 1,29,000. 50.38. 65 divided by 1,29,000 is equal to 50.38%. 37,000 divided by 1,29,000 is equal to 28.68%, and 27,000 divided by 1,29,000 is equal to 20.93%. Correct, guys? So that means P is holding, after considering the potential voting right, P is having 50%. Shareholder 1, shareholder 2 is having 28%, and shareholder 2 is having 20.93%, right? Now other facts have not been given in the question. Now in this case, voting rights, A is holding more than 50%. It seems P is holding more than 50%. It seems P is the acquirer in this case. Right? P is the acquirer. Acquirer in this case, subject to other factors. Other factors as mentioned under Ind AS 110. As mentioned in Ind AS 110. Right? What are those factors? This is the same factors which we have discussed just 15 minutes ago: power, exposure, and ability. If all those things are there, we will say it is a control. Right? So in this case, we have evaluated how the potential voting rights needs to be evaluated for the purpose of evaluating control. China has raised a mistake. He has raised a point, sir. Is there a mistake in the question in the name of company X in the first line of second paragraph? First line of second paragraph, after the above transaction, the shareholding of companies X to other original shareholder. No, it's correct. So what the question is saying, this is the company X, right? This is the company X. The shareholding of the company's X shareholders. He is talking about the shareholder of companies X. They are holding 35,000 shares and 25,000. No mistakes in the question. Are we clear, guys, how this needs to be evaluated? Yes or no? Now let's take a break for 15 minutes, guys. And after the break, we will move on. Sheena is saying, sir, actually, I am having a previous module. Please be clear, guys. Your module should be updated. Right? Let's take a break of 15 minutes. P acquires now when 40% acquired or when option exercise. In this case, first of all, P has acquired 40,000 shares, not 40%. Be mindful, right? 40%, 40,000 shares. Let me open the question again. Okay, P has acquired 40,000 equity shares, right? Plus he has also got the options today. To acquire in future, right? He has an option today to convert these options to acquire the additional shares in the future. That is called potential voting rights, and that potential voting rights considered today for the purpose of determining who has acquired the control, right? That is why we are doing this today itself on the date of acquisition. Poonkala is, hello? Okay. Right? So this accounting needs to be done, this evaluation needs to be done on the date of acquisition. Poonkala is asking, explain is again. So Poonkala, we have not done anything. We have just taken the share capital acquired by the company, right? And what is the potential voting rights which is to be acquired in future? And basis this, we have computed our revised stake, right? So basis this, we are saying one company P is holding 50%, more than 50%. B, a shareholder 1 is holding 28%, shareholder 2 is holding 20%, right? So more than 50% is held by P. So P seems to be an acquirer, provided other factors of Ind AS must be satisfied. Correct? That is what we are saying here. Okay, guys. Okay, let's move on. And let's talk about the next concept. Acquisition can be through cash, right, or equity shares, right? So in cash, if the consideration is discharged in cash, right, or we can say discharge of purchase consideration, right? Entity who provides cash in consideration is the acquirer. The entity who provides cash or bank, right? We not should say cash, bank or cash in the consideration is the acquirer, right? If the consideration is discharged in equity shares, then what will happen? Entity which issue its equity shares is the acquirer. Right? In evaluating the acquirer, Ind AS 110 principle needs to be evaluated. Principles needs to be evaluated. Right? Plus couple of other factors to be evaluated. Right? What are those? Rights held by large minority interest. Right? Governing body. senior management. Right. So simply we are saying that if the acquisition is by shares or it by equity share, who is the acquirer in this particular case? Now, guys, let's come to the question. Right. Question number 6. Question number 6, page number 13.22. Question 6, page 13.22. ABC Limited incorporated a company, Super Limited, to acquire 100% shares of another company. So ABC company has incorporated a company called Super Limited to acquire the 100% shares of another company, Focus. Right? Focus Limited. And therefore to obtain the control on Focus. So ABC wants to obtain a control on Focus. So what he has done, he has developed a separate company called Super Limited to acquire Focus. To purchase the fund, to fund the purchase, the Super Limited acquire a loan from bank. So what Super Limited has done, he has taken a bank loan, right, at market rate. The loan fund are used by Super to acquire the voting rights of Focus Limited at a fair value in an orderly transaction. So Super Limited has acquired 100%, right, entire voting rights, 100% voting rights, right, 100% voting rights at fair value. Correct. Post the acquisition, Super Limited has the ability to elect or appoint or to remove the majority of the members of the governing body. Right. So Super Limited has certain rights. What are those rights? What are those rights? Appointment of governing body. Appointment of governing body. Right. Removal rights of majority of members. Removal rights of majority of members, right? And also Super Limited management is in the power where it will able to dominate the management of the Focus. So question is saying they have the power to dominate. Right? Can Super Limited be identified as acquirer in this business acquisition or combination? Guys, so ABC Limited wants to acquire a control on Focus Limited. So what he has done, he has developed the Super Limited. Super Limited has taken a bank loan. Super Limited has invested the money in the Focus. He has acquired voting rights. He has acquired certain more rights, appointment of governing body, removal rights of the governing body or majority of members of governing body, and he has the power to dominate. Can we say that Super Limited can be identified as the acquirer? Who is the acquirer in this case? ABC Limited is the acquirer or Super Limited is the acquirer? Who is the acquirer? Who is the acquirer, guys? So in this case, Super Limited shall be identified as acquirer. Right? Why? Because all these parameters, 100% voting rights, right, and the other rights are available with the as all such rights as mentioned above are available with super limited, right? This is the answer, guys. But how you need to present? You need to present in the same way as we discussed in the last class, right? This is the gist. Correct? Are we clear, guys? Okay, let's move to the next question. Next concept. Next is step number 2. Determine the acquisition date. Determine acquisition date. What is acquisition date? Acquisition date is the date on which acquirer has acquired control over the investee, right? Acquisition date will be the effective date on which acquirer obtains control over investee, right? What is the effective date? Effective date shall be the date on which acquirer has transferred the funds, right? Obtain the control of assets, assumed liabilities, right? Okay. Jay Srivastav is saying, sir, अगर control ही meet नहीं हुआ तो क्या करेंगे? So I am outside the standard of Ind AS 103. Then I will need to look at any other standard which provides a guidance how to account for those scenario. राइट अगर कंट्रोल मीट नहीं हुआ फॉर एग्जांपल जॉइंट कंट्रोल है फॉर एग्जांपल अगर कंट्रोल मीट नहीं हुआ तो सिनेरियो क्या बना व्हाट विल बी दैट सिनेरियो कंट्रोल नॉट एग्जिस्ट राइट ए लिमिटेड is holding 55%, B is holding 45%, right? This is C limited. Now let's say we are saying A limited acquired 55%. A limited acquired 55% from B limited, right? And when we have actually evaluated the control, A is not having control. A limited is not having control, right? So that means अगर A के पास कंट्रोल नहीं है, I am outside the standard of outside 103. Right? Now we need to look at whether C is an associate for A or it's a joint arrangement. Evaluate C Limited is an associate of A or it is a joint arrangement. Right? 55% पे भी अगर control नहीं है, right? So we need to evaluate whether it is an associate or whether it is a joint arrangement. Then we will be able to conclude. Okay. Vidula has raised one question. Sir, ABC Limited will not be the, in illustration 6, why ABC Limited will not be the acquirer though it has incorporated Super Limited. So guys, that is what we are understanding. Which legal entity is acquired? Ultimately, acquired the Super Limited nahi kiya na. A Limited has formed this company, but Super Limited is actually acquired. So that means going forward, what is happening? ABC Limited, Super Limited, and Focus Limited. 100% subsidiary. So that means ABC Limited has acquired Focus through subsidiary, through Super Limited. It becomes an indirect subsidiary or a step down subsidiary of ABC Limited. So accounting uski books mein ki jati hai, who is the acquirer. So it's important to identify who is an acquirer. Whether ABC Limited directly acquires the control? No, ABC Limited has acquired the control, but through Super. Okay guys, effective date shall be the date on which acquirer has transferred the funds, obtained the control of the asset, assumed the liabilities. Correct? Now let's say effective date if any regulatory approval needs to be obtained in order to obtain control, right? Effective date shall be the date on which regulatory approval has been obtained. Right? अगर कोई regulatory approval हमें obtain करनी है, so effective date shall be after that date only. Right? Another example would be no binding agreement between purchaser and seller. So question will confuse you guys. Question will say if there is no binding agreement between seller and purchaser, can we do the business combination accounting? Think about it. Purchaser and seller. If there is no binding agreement between purchaser and seller, business combination accounting cannot be done. Right? So what is acquisition date? It is that date when the acquirer obtains a control. Right? What is that date? It is an effective date when the acquirer obtains a control. Effective date क्या होती है? Effective date when we have actually obtained a control. right? When we have actually obtained the control of the assets, when we have assumed the liabilities, when we have transferred the funds, right? Is it possible कि मैंने asset ले ली, liability assume कर ली, but funds नहीं दिए? It is not possible. Let's say you are acquiring a land, right? You have not paid the funds and you are asking the seller to get the registry done in your name. Is it possible? No, he will never agree on this principle. So it is based on the general principle that when you are transferring the funds, only then you are able to get the control of the assets and liabilities. Right, guys? Now let's take a couple of questions on this. Question number 7. Question number 7 on page 13.27. Question 7, page 13.27 of study mat. Can an acquiring entity account for a business combination based on non-signed, non-binding, on a signed, non-binding intent, non-binding letter, signed, non-binding, signed, non-binding letter where the exchange of consideration and other conditions are expected to be completed in next 2 months, right, guys? Let's say A Limited enter into a contract with B Limited for what is the contract? Purchase of stake in B. Correct? So they have signed a letter. Agreement exists. Shareholder agreement exists. Agreement signed by both parties. Correct? But it is non-binding. Can we do the business combination accounting? If the shareholder agreement, what is non-binding? Right? What is non-binding? Non-binding means any party can terminate. Any party can terminate the contract. Right? No penalty applicable. No penalty applicable in case of termination. No penalty applicable in case of termination, right? So can we do the business combination accounting? What is the answer? Business combination accounting cannot be done in case of signed non-binding agreement. Are we clear, guys? Is it possible to get the business combination accounting in case of non-binding agreement? Not possible. Not possible. Okay, now let's move on to question number 8. Question 8, page number same 13.27 study mat. On 1st April, X Limited agreed to acquire the shares of B Limited. On 1st April, A Limited acquire the shares of B Limited, all equity deal, 1st April. Right? As per the binding agreement, X Limited, it's not A Limited, it's X Limited. Right? Binding agreement, X Limited will get the effective control. Effective control on 1st April. Right? As per the binding agreement, X Limited will get the effective control. So we are saying on this date, X will obtain the effective control. Okay, however, the consideration will be paid only when the shareholders' approval is received. Shareholders' approval to be received in future. right? Payment will be made in future. Funds to be transferred in future, right? The shareholder meeting is scheduled on 30th April. Let's say this is 30th April. If the shareholders approval is not received for the issue of new shares, then the consideration will be settled in cash. तो यहां पर क्या है, एक्वायर तो करना ही है, बट शेयर होल्डर अप्रूवल नहीं आएगी तो नो अप्रूवल, then even then company will purchase, but purchase will happen in cash. No approval, then purchase will happen in cash, right guys? Now in the question it is mentioned that the company has obtained the effective control, right? The company has mentioned on the effective control on what? On assets, on liabilities, right? On business, on control on what? On the decision making activities. Correct? Now the shareholder approval needs to be done as on 30th April, which will decide whether the consideration is to be transferred in cash or whether the consideration is to be transferred in equity. Now guys, question is asking what is the acquisition date? What do you think so? Can we say 1st April is the acquisition date, or can we say 30th April is the acquisition date? On this particular date, remember it is mentioned on this particular date, question is saying that the company has obtained the effective control. What is the acquisition date? So acquisition date will be 1st April. Acquisition date will be effective date, which is 1st April. Correct? Business combination accounting needs to be done on effect on acquisition date. Correct guys? So this will be question number 8. Now let's talk about question number 9. What is question number 9? It is in respect of court approved scheme. Question number 9, page number same, 13.27. Couple of people have answered. Sairam is also saying 1st April. Jay Srivastav is saying 1st April. Question is actually confusing you that the decision in respect of the discharge of consideration is to be decided later. But I have acquired the control today, right? But practically it happens. I don't think so. Practically it happens that as a seller, I don't know whether I will get cash or I will get equity shares. I have transferred the business. It is not practically possible, right? It's only about confusing you guys. So we need to be very careful. Right, business combination. ABC Limited acquired all the shares of XYZ Limited. So ABC Limited, let's say this is ABC Limited has acquired XYZ. This is XYZ Limited. Acquired all shares, 100% acquisition. Acquisition of XYZ. Correct? And the agreement was finalized on 1st March. So there are a couple of dates. Let's say this is 1st March. 1st March 2001. While ABC Limited obtains the power to control XYZ operation on 1st March 2001. Negotiation commenced with the 1st January को. So this is 1st January, right? Negotiation commenced. Negotiation commenced. Agreement final हुआ 1st March को. This is finalization of agreement. Finalization of agreement. right? While ABC Limited obtains the power to control the XYZ operation on 1st March, the agreement said that acquisition date is effective from 1st January, right? ABC Limited obtains the power. Power has been obtained on this date. Obtains power on operations. Power obtain करी on 1st March 2001 को. The agreement states that acquisition date is effective. अब now agreement is providing certain guidance. Agreement is saying that acquisition is effective. Acquisition is effective from 1st January 2001. ABC Limited is entitled to profits from 1st January 2001 and ABC is entitled to profits from 1st January 2001, right? In addition, purchase price is based on 1st January 2001. Purchase price or consideration is decided based on balance sheet and P&L as at 1st January 2001. What is the date of acquisition? Very simple question, very good question. 1st January, right? Negotiation commenced to acquire XYZ Limited, right? 1st March 2001 agreement finalized हो गया, right? And this is the date on which A Limited has acquired the power. A Limited has acquired the power. That means A Limited has acquired the control, right? And what is the acquisition date? It is the date when which one company, one enterprise obtains the control of another enterprise. Now the question is also saying the agreement which has been finalized between both the parties, it is saying that the acquisition should be effective from 1st January. Acquisition यहाँ से effective होनी चाहिए, right? ABC is entitled to profit from 1st January, correct? Purchase consideration is to be decided based on the net position as on 1st January. Right? Agreement is providing couple of more inputs. The finalization of number will be based on 1st January. Finalization of purchase consideration will be based on 1st January. Agreements to be effective from 1st January. What else? Profit is ABC is entitled to profit from 1st January, right? But are we concerned with only what is mentioned in the contract? Or we need to look at on which particular date ABC will acquire a control on the other company. What is the definition of acquisition date? Right? Acquisition date definition is when one party acquires control over another entity. What is that date in this example? In this example, 1st March 2001 is the date on which ABC Limited has acquired control on the another company. So what is my acquisition date? Acquisition date in this question is 1st March 2001. 1st March 2001. Are we clear, guys? We should not get confused from the other facts which have been given in the question, which is not relevant for evaluating when the control has been transferred. Are we clear, guys? Jay saying, yes, sir, 1st March 2001. What about others, guys? Okay, let's take another question. Question number 10. Page 13.28 of study mat. Regulatory approval. ABC Limited and XYZ Limited are the manufacturers of rubber component of a particular kind of equipment. ABC makes a bid for XYZ Limited business. Okay. So ABC Limited and second one is XYZ. Right, are the manufacturer of the rubber components. So they are in the business of rubber components. Rubber components. Correct. ABC Limited makes a bid for XYZ business and the Competition Commission of India announces. So first of all, ABC Limited has applied for bid offer to acquire XYZ. The commission, the Competition Commission of India announces that the proposed transaction is to be scrutinized. So they are saying we need to do the scrutiny. Correct? To ensure that the competition laws were not breached. Even though the contracts were made subject to the approval of CCI, ABC Limited and XYZ Limited mutually agree that the terms of acquisition and purchase price before the competition authority. That means before CCI approval, all the terms have been finalized. Purchase consideration finalized. Acquisition of assets finalized. Liabilities finalized. Right? And the purchase price before the competition authority clearance is obtained. Can the acquisition date in this situation be the date on which ABC Limited and XYZ agree the terms even though CCI approval is awaited? If CCI approval is awaited, can we do business combination accounting? Simple question. Simple question. Sheena, Jay, Vidula, if the regulatory approval has not been received, can we do the business combination accounting? So Jay Srivastava is saying we need to wait for CCI approval. So business combination accounting cannot be done before regulatory approval. Right? It cannot be done before the regulatory approval. Are we clear, guys? Are we clear, guys? Yes or no? Have we gained the understanding what is the acquisition date? Any doubt, guys? I'm looking for any doubt. Any doubt, guys? Sheena saying, yes, sir, it cannot be doable. Okay. Now let's move on. So we have discussed two steps. First is what? Determine, identify the acquirer. Second is determine the acquisition date. Right? It is important because we need to do the accounting of business combination in the books of acquirer only. We need to do the accounting of business combination only on the date of acquisition, not from or not on any other date. Right? Okay. Now come to step number 3. What is step number 3? Determine purchase consideration. Right? Guys, can you tell me what are the different types of purchase consideration? How the purchase consideration is to be discharged? How the purchase consideration needs to be discharged? What can be the possible methodology or possible way out? Right? It may be a couple of things. Right? First is cash. Purchase consideration can be transferred through cash, can be transferred through assets. Right? Transferring assets, cash payment. What else? Assuming liability. Right? Assuming liability. Purchase consideration can be discharged through equity shares. Right? Issuing equity shares. Then we have contingent consideration. Then we have deferred consideration. Correct? Then we have deferred consideration. Vidula is saying, sir, I am confused between illustration 8 and 9 regarding the content of the agreement. Illustration 8 and 9. This is 10, this is 9. So in 9 we are saying agreement is saying that the agreement is going to be effective from 1st January. Purchase consideration is to be computed from 1st January and ABC is entitled to profits from 1st January. Right? So we are saying that actually the control has been acquired on 1st March. So what we need to look at when the control has been acquired. Control is actually acquired on 1st March 2021. That's why in this case we are saying this is the acquisition date or the effective date. Right? In this case, what we are saying is control has been acquired on 1st April 2021. Right? But shareholder approval needs to be taken on 30th April in order to decide whether the consideration is to be discharged in cash or through equity shares. But when the control has been acquired 1st April 2021. In both the cases, we are saying what is the answer? When the acquirer obtains the control. This is the date when the control has been acquired. In this case, it is the date when the control has been acquired. Right? So there is no need to get confused, Vidula. The question is very clear. The answer is also very clear. I hope this is clear to you now. Okay, guys. So what we are saying is purchase consideration. Purchase consideration is in the form of cash, is in the form of assets, is in the form of assuming a liability. In the form of issuing equity shares, contingent consideration, deferred consideration. Right? Now the point is how the purchase consideration needs to be recognized. So purchase consideration needs to be recognized at fair value. Right? At fair value. That means in this case, fair value, in this case, fair value, in this case, fair value, and in this case, fair value. Right? Purchase consideration needs to be determined at fair value only. Right? Cash payment, we understand. Assets transfer, we understand. Liability assuming, we understand. Issuance of shares, we understand. But what is contingent consideration, guys? Can anyone tell me what is contingent consideration? What is contingent consideration? Contingent consideration means purchase consideration to be payable only on the occurrence or non-occurrence of future events. Only on the occurrence and the non-occurrence of future events. What can be the examples? Right? Payment of additional 10 crores if the EBITDA after 2 years reaches to 2x. अगर आज EBITDA is 100 crores, after 2 years it reaches to 200 crores, then I will pay 10 crore rupees extra. Right? What else? Payment of additional 5 crores. Right? If company obtains patent approval. Right? License approval. So what is contingent consideration? Contingent consideration means it is the amount which is to be payable on the occurrence or the non-occurrence of future events. Occurrence and the non-occurrence of future events. Correct? So I hope this must be clear. What is deferred consideration? Fourth point is deferred consideration. Deferred consideration. Right? That means consideration is to be payable in future period. Consideration is to be payable in the future period. Right? Such deferred purchase consideration shall be recognized at present value of future consideration payable. Right? So we need to recognize the entire purchase consideration at present value or fair value. If I'm saying, let's say, if I'm saying purchase consideration A limited, B limited, right? 100 crore rupees acquire. Purchase consideration is equal to 100 crores, right? Cash 50 crores. Cash 50 crores and deferred consideration after 2 years is equal to 50 crores, right? So what is the present value? Present value is equal to 50 crores, and present value I need to compute, right? Let's say it comes out to be 40 crores. I'm assuming this number, correct? So my present value of purchase consideration is equal to 50 crores plus 40 crores is equal to 90 crores, right? How to compute goodwill? Purchase consideration is 90 crores minus net asset acquired at fair value plus NCI. Let's say net asset is 60 crores. NCI is 0. My goodwill is 30 crores. Correct? So we need to consider the purchase consideration at fair value. Right? How to do the fair valuation? I hope I am not supposed to tell you. You guys are champion in financial instrument now. How to compute present value? Simple. If 50 crore rupees is to be payable after 2 years, right? Payable after 2 years. How to compute? This is my year, second year, cash flows, 50 crores, present value factor, let's say at the rate of 10%, multiply by present value factor is equal to my cash flows. Right? What is my present value factor? 0.821, 0.826. Right? So this will be my present value, which is multiplied by 50 crores. So this is coming out to be 41.23 crores. Right? This is the way we compute present value, guys. Refer FI chapter. Are we clear? Yes or no? Are we clear, guys? So this will be my purchase consideration. This is how I need to compute. So if I want to extend my formula, right? What is the formula we were using? How to compute goodwill? How to compute goodwill, right? If I want to extend my formula, purchase consideration, right? What is in purchase consideration? Cash, assets transferred, assumed liabilities, equity shares, contingent consideration, correct, and deferred consideration. This is my net PC. Net PC, and everything needs to be at fair value. This needs to be at fair value. This needs to be at fair value. This will 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 be at fair value. right? Then what should I do? After this, I will minus net assets acquired 100%. Remember 100%. Only then we are adding non-controlling interest, right? Non-controlling interest. What is this? This is my goodwill or bargain purchase gain. On every step, guys, we have started with a simple example: purchase consideration minus net asset acquired is equal to goodwill. On every step, we will keep on extending this formula. We will keep on extending this formula. Are we clear? Sorry. Right. So what we have discussed, we have said that in purchase consideration there are multiple things: cash, assets, liabilities transferred, equity shares, contingent consideration, deferred consideration. Right. This we have discussed on initial recognition. Right. Subsequent recognition, if let's say there is a contingent consideration, after 2 years down the line I need to pay cash. Today I've recognized fair value. What is the subsequent treatment, subsequent recognition of contingent consideration? Subsequent treatment, subsequent recognition and measurement of contingent consideration. Right? So now, guys, what we need to do, we need to evaluate whether contingent consideration is the nature of liabilities in the nature of liability or in the nature of equity. Can any one of you guys tell me how to evaluate whether the contingent consideration is in the nature of liability or equity? Where it is defined? Where it is defined? I am highlighting couple of boxes and just evaluate. Have we read the liability or equity somewhere in the past? If it is in the nature of liability, initial recognition will be at fair value, fair value. Subsequent recognition will be at fair value through P&L, and for equity, no remeasurement. Right? How to evaluate liability versus equity? How to evaluate liability versus equity? Very simple answer. Very simple answer. We have discussed in detail liability versus equity. Refer Ind AS 32. What is Ind AS 32? Financial instrument. The standard which is close to your heart. Right? What is the principle? Contractual obligation to pay cash is my liability. What is liability? What we have read there. What is liability? We have said contractual obligation to pay cash. To pay cash. Do we need to read this definition again in 103? No, we already know in Ind AS. We have already read in Ind AS 32. Right? Contractual obligation to pay cash or bank. Second, convertible instrument. for convertible instrument, right? What we said, settlement through own equity shares. Settlement through own equity shares, where fixed to fixed gets failed. Correct? What is equity? What is equity? We have read how many definitions? We have read 3 definitions. One, residual interest in total asset excluding liabilities, right? Second, residual interest excluding total asset, excluding interest in total asset, excluding liability is my equity. Second, no contractual obligation. Obligation to pay cash or bank. Third, for convertible instrument, settlement through own equity shares, where fixed to fixed meets. Do you remember, guys, the liability versus equity definition? Right? So if it is in the nature of liability, then subsequent accounting will be FATPL. If it is in the nature of equity, there will be no remeasurement. Are we clear, guys? Yes or no? Quickly. Okay, we have left with 6 minutes. One more small concepts. Let's cover that concept as well. In the next class, we will do some questions as well as some more concepts, right? So next concept is purchase. Within the purchase consideration, the next concept is transaction cost. Have we read the transaction cost in Ind AS 109? Apply the same logic. Refer Ind AS 109 as well. What is transaction cost? Transaction cost is the incremental cost which would have not been incurred if transaction doesn't happen, right? Transaction cost is that cost which would not incurred if the transaction does not happen, right? Example, guys, quickly give me an examples of transaction cost. Legal cost. B, stamp duty cost. C, registration charges. D, brokerage. E, commission. D, etc. Right? These are the transaction cost. Right? Now, what is the accounting of the transaction cost? Accounting of transaction cost. Transaction cost shall be charged to profit and loss account. Transaction cost shall be charged to profit and loss account. Right? Transaction cost will not form part of goodwill. Goodwill में नहीं जाएगा, it will be charged to P&L. Right? In India's 109, what we were saying, amortized cost है तो it will be capitalized. It will be capitalized in the value of the asset. FETOCI it will be capitalized. FETPL it will be charged to P&L. Liability side में if it is related to amortized cost, it will be adjusted. Adjusted means loan लिया 100 rupees का, I have paid transaction cost 5 rupees. That means I have taken a loan of 95 rupees. If it is a liability side FETPL category, it will be charged to P&L. I hope you remember the concept of financial instrument. Okay. What would be the accounting entry? What would be the accounting entry? Transaction cost, P&L account debit to bank. Correct? On the payment of transaction cost. Are we clear, guys? Now let's say, guys, I will provide you some sort of overview as well. Now let's take an example. A Limited and this is B Limited. B Limited has subsidiary, 100% subsidiary X Limited, 100% subsidiary in Y Limited. This is legal entity. Legal entity. Right? Legal entities. While doing the business combination accounting, guys, it's not only a methodological. It's based on substance. It's based on judgment. You need to evaluate how the accounting needs to be driven as per the principle of 103. Now let's say A Limited acquired X Limited. Acquired 100% X Limited at 100 crores, right? So what is my revised structure? A Limited and then we have X Limited, 100%. B Limited, he is having Y Limited, 100%. Both are legal entity. Both are legal entity. Correct? And A has acquired at 100 crore rupees. Correct? Now, guys, I am doing the accounting in the standalone books of A Limited. In standalone, and this has happened on 1st January 2022. Acquisition date 1st January 2022. Correct? Standalone financial statement of B Limited, of A Limited, sorry. Now tell me guys, on 1st January, what accounting entry should I pass here? In the standalone financial statement of A Limited. Quickly guys, what is the accounting entry we should pass here? So first entry will be investment account, or I would say investment in X Limited account debit to bank 100 crore rupees. Right? Second, now guys tell me, where should I do the business combination accounting? I need to compute goodwill. Net asset is, let's say, net assets acquired of, let's say, 60 crores. Right? So I need to do the business combination accounting where? In the consol books. A Limited CFS. Right? I need to apply business combination accounting. What is business combination accounting? Goodwill. Correct? Purchase consideration 100 crore rupees minus net asset acquired 60 crore rupees. My goodwill is 40 crores. Correct? So what is my first entry of this goodwill? Entry will be net asset account debit 60 crores. Goodwill account debit 40 crores. And to my purchase consideration 100 crores. Correct? I hope this concept must be clear to you. This is the basic. Now in this transaction, what has happened? Now I'm involving or adding some complexities. Right? What is it? Complexities. A Limited incurred transaction cost of rupees 10 crores. Right? Of rupees 10 crores. Now, first of all, guys, can you tell me what is the accounting of this 10 crore rupees in the standalone books of A Limited? What should I say? What should I say? Accounting of transaction cost. Right? What should I say? To bank 10 crore rupees. This is debit. Where should I capitalize? Where should I capitalize or where should I charge this debit side? Whether it will go in the P&L or whether it will be parked in investments. Where should I consider this debit side? What is my total investment? If let's say you go in the market and purchase an asset, what you do? You will take purchase price, you take directly attributable cost like freight charges, installation cost. If there is a trade discount, you will reduce it. If there is a non-refundable taxes, you will exclude. And if there is any transaction cost brokerage, you will add. Suppose I purchase a land of 100 crore rupees and I pay the brokerage of 10 crore rupees. At what value I have purchased the land? My land cost as per Ind AS 16 will be 110 crore rupees. Right? Similarly, when I have made an investment, at 100 crore rupees. I have paid 100 crore rupees to the seller, but I have paid 10 crore rupees as a brokerage. I have paid 10 crore rupees as a commission. So what is my total cost of investment? In that case, my cost of investment will be 110 crores. Investment will be 110 crores. That means what is the value of investment in total? Purchase price purchase price 100 crores plus brokerage which I have paid, the transaction cost which I have paid 10 crore rupees, this will be 110 crores. Correct? But sir, just 10 minutes ago you said the transaction cost needs to be charged in P&L. Transaction cost needs to be charged in P&L as per business combination accounting, guys. Are we doing business combination accounting in the standalone? No. We are doing business combination accounting in the console, right? So in console, we need to pass an additional accounting entry. The transaction cost which I have capitalized, that will be charged to P&L. So what will be the accounting entry? Accounting entry will be very simple. P&L debit transaction cost, account debit 10 crore rupees. बैंक तो ऑलरेडी आउटफ्लो हो चुका है स्टैंड अलोन में, राइट? कंसोल में व्हाट शुड आई डू? आई विल रिवर्स माय इन्वेस्टमेंट्स. Accounting of transaction costs, right? So that means in the standalone books, the transaction cost will get capitalized as per which standard? As per which standard? Transaction cost will be capitalized as per Ind AS 27. Transaction cost will be charged to P&L as per 103. Business combination accounting only applies in CFS. अगर business combination accounting standalone में हो रही है, for example business ही acquire कर लिया, तब तो investment होगी नहीं, तब तो everything is the business combination accounting, then it will be directly charged to P&L. But if you combine these entries, investment to bank and investment and P&L debit to investment, what is the net impact in the console books? Net impact in CFS, P&L transaction cost debit to bank. I hope guys, I have added some complexities in respect to the transaction cost in the standalone accounting and in the console accounting, and I hope this must be clear to you, right? So what is the homework, guys? First of all, recap all concepts. Practice all questions done in class. Correct? And third one is read and understand examples given in study mat. Right, guys? So Vidula is saying standalone Ind AS 27 will apply for transaction cost in standalone, absolutely, and in console 103 accounting needs to be done. Correct, guys? Thank you very much for your patience. Let's meet in the next class, and today I will share these handwritten notes. Correct, guys? Thank you, Nisarg, for your support. Thank you, guys. Bye-bye. Have a good day.